The renowned value investor Warren Edward Buffett transformed a failing textile mill into the financial engine of the world's most prosperous holding company. Buffett, dubbed the Oracle of Omaha for his skill in investing, has accumulated a personal wealth of more than $130 billion, as reported by Forbes. He motivates hordes of devoted followers to travel to Omaha, Nebraska once a year to hear him speak at Berkshire's annual meeting, ironically called Woodstock for capitalists. On August 30, 1930, in Omaha, Nebraska, Howard and Layla Buffett welcomed a baby into the world. He was the only male and the second of 3 children. His father was a U.S. representative for 4 terms and a stockbroker. While serving non-consecutive terms on the Republican ticket, Howard Buffett advocated for libertarian policies. Selling soft drinks and running a paper route was one of Warren's early interests in making money. He invested the money he made from these ventures when he was 14 years old, and he later turned a profit by renting out the 40 acres of land. At the age of 16, he applied to the University of Pennsylvania at his father's encouragement and was accepted. After 2 years, Buffett transferred to the campus of Nebraska and departed that campus. After graduating, his father persuaded him once more of the need of education and urged him to seek a postgraduate degree. Buffett was admitted to Columbia University after being rejected by Harvard. Buffett attended Columbia, where he studied under the renowned value investing expert Benjamin Graham. Despite his sluggish beginning, Buffett's career at Columbia was legendary. After Buffett graduated, Graham declined to hire him and advised him not to pursue a job on Wall Street. Graham's personal rejection from Wall Street firms stemmed from his belief that his Jewish heritage was the reason behind it. Graham therefore instituted a policy of hiring only Jews for his Wall Street firm. Buffett went back to work at his father's brokerage business in Omaha. In 1952, he with Susan Thompson, and the two of them began a family. Graham changed his mind after 3 years and offered Buffett a job in New York. Buffett, in contrast to his master Benjamin Graham, believed that while evaluating an investment, one should evaluate a company's competitive edge in the market, its management team, and the quality of its product. Important achievements. Buffett had the opportunity to expand on the investment theories he had studied under Graham at Columbia once he arrived in New York. Graham defined value investing as the process of identifying equities that were trading at a markedly lower price than the value of the underlying assets, or what he referred to as the intrinsic value. Buffett took the idea to heart, but he was eager to expand on it. After his return to Omaha in 1956, he started Buffett Associates and went on to buy a home. Having met Charlie Munger in 1959, he was 30 years old and already a multimillionaire when he teamed up with him in 1962. Their partnership ultimately led to the creation of an investment ethos predicated on Buffett's notion that value investing is more than just a means of salvaging a few bucks from failing companies. The couple bought Berkshire Hathaway BRKA, a shuttered textile mill, along the way. Originally a textbook Graham-style value play, this investment turned into a longer-term hold once the business started to show some signs of life. The textile company's cash flows were utilized to finance additional ventures. Eventually, the various interests overshadowed the primary business. Buffett closed the textile company in 1985, but he kept the name and grew Berkshire Hathaway into a multi-billion-dollar holding corporation over time. Managing Berkshire Hathaway with Buffett. In 1962, Buffett purchased his first Berkshire Hathaway shares. The textile company was in dire need of funding due to low-cost competition. Drawn in by the stock's cheap price relative to its book value and net working capital, he bought a majority stake in 1965. When Buffett purchased the stock, it was selling for about $8. By the time he became CEO in the late 1960s, shares had increased to over $20. Shares of Berkshire Hathaway Class A stock are trading for more over $620,000 as of July 2024. How was it accomplished by him? Buffett acquired other businesses, such as the life insurance company National Indemnity, with the proceeds from the textile company. Buffett discovered that life insurance firms are beneficial because of their float, or the money left over after premiums are paid but before claims are settled. With the proceeds from this float, Buffett may increase his investments by purchasing securities and other ventures that might increase revenue for further investments in additional companies and shares. By 1969, he had dissolved his investment partnerships, accepting shares of Berkshire Hathaway in exchange for cash, and he had acquired insurance businesses as fully owned subsidiaries of Berkshire. In 1972, he made the purchase of See's Candy, which increased his cash flow for investments. Among many others, he made investments in Apple, American Express, Bank of America, Coca-Cola, and many other companies, concentrating on strong brands and companies with a stable economic moat. Buffett preferred to purchase and keep his investments, which had a tendency to increase in value over time because he was a long-term investor. When good fundamentals are for sale, he looks for companies with creative, shareholder-focused management and large profit margins. In 1985, Buffett closed the last textile factory at Berkshire Hathaway and instead built the company into a conglomerate through steady growth. As of July 2024, Berkshire Hathaway had a market valuation of over $896 billion and owned over 65 firms wholly. Riches and generosity. If you are the most successful investor in the world, what do you do with your money? Give it away if you're Warren Buffett. Buffett shocked everyone in June 2006 when he said that the Bill and Melinda Gates Foundation, which addresses worldwide health challenges, U.S. libraries, and international education, among other things, would receive the great majority of his fortune. It is among the biggest open charities in the world. Buffett will provide Class B Berkshire Hathaway stock as part of his offering. 10 million shares are the total amount he donated to the Gates Foundation. Until Buffett passes away, the foundation doesn't achieve the expenditure requirement, or Bill or Melinda Gates isn't actively involved in the foundation's operations. It will be distributed in 5% increments. Buffett donated 500,000 shares in 2006, which were worth roughly $1.5 billion. The Bill and Melinda Gates Foundation staff received an email in June 2022 from Mark Sussman, the foundation's CEO. The email, which stated that Buffett has contributed more than $36 billion since 2006, was also posted on the foundation's website. According to the Wall Street Journal, he will donate $900,000 shares of Berkshire Hathaway stock in 2024 for a total estimated value of $4 billion. 2122 Buffett anticipates that sum to rise over time due to stock price gain. Another $600,000 shares of stock were donated in 2024 and split equally among 3 nonprofits that Buffett's children oversee. $900,000 more shares were donated to a foundation that was established in memory of his first wife. Although Buffett's massive donation to the Gates Foundation was unexpected, his altruistic activities are not unprecedented. He had been donating money for 40 years through the Buffett Foundation, which was later renamed the Susan Thompson Buffett Foundation. Its sole objective is to provide low-income Nebraskan kids with college scholarships. Buffett initially stated that the majority of his money will be donated after his death, although that was never his intention. Buffett's sudden change of heart is typical of him: reasonable, self-assured, unconventional, and forging his own route. He famously declared, "I know what I want to do and makes sense to get going," after deciding to make the shift. Buffett's wealth was amassed through well-thought-out and prompt acquisitions of cheap stocks and businesses, which he would later keep for a long period. Because the current management of the majority of the companies he purchased had clearly done a decent enough job to interest Buffett in the first place, he let them to stay in place. Having invested in equities for many years, he has held businesses like American Express and Coke for many years. How is Warren Buffett going to use his wealth? The straightforward response is to give it away, which is exactly what he intends to do by making enormous donations, mostly to the Bill and Melinda Gates Foundation, with whom he has developed a close relationship and who he respects and shares their philanthropic ideals, which include women's rights and global health. It is not surprising that Warren Buffett would donate the great bulk of his fortune to beneficial charities, given his reputation for being a generous giver. The final word. Buffett appears set to continue giving out larger sums of money in the future. He stated to BBC News in 2006, "I am not an enthusiast of dynastic wealth, particularly when the alternative is 6 billion people who could benefit from the money, but have much poorer hands in life than we have." Buffett has amassed a fortune by adhering to the tried and true value investing principles, which call for identifying high-quality businesses at fair market values. He then keeps these investments for an extended period of time, some even indefinitely, always letting compounding's magic happen. Don't forget to like, share, and subscribe for more insightful content. Thanks for watching.